In this video, traders want to ask the question, how many charts is too many? Stay tuned. Hey guys, and a very warm welcome to you. All right, so we have the facility now to pretty much have as many charts as we want, right? Regardless of what sort of screen setup we've got, we can have multiple charts on one screen. And so the question becomes, how many charts is too many? And bearing in mind, there's a bit of an offset between having too much information and having not enough information. It's that sweet spot. Now, personally for me, I've cut my screens down massively. I used to have two quad stands. I'd have a separate laptop as well. I'd have a desktop running stuff. I'd be sitting there, I'd have all these screens and have all this information on. Now, I think that looking back, that probably was too much. You don't really need that much information. I think personally I fell into the trap of thinking, well, I need to have everything on the screen just in case I don't want to miss something. But in reality, you don't need that. Now, the theory behind it is that, okay, you've got your main markets here, then maybe you've got some complementary markets like gold, crude oil, euro, etc. Let's say you're trading the indices. You've got some commodities and you've got some forex pairs. Maybe you've got some treasuries, etc. on there, so you can see a broad market. But in reality, does it play a big part in your trading decision? That's what the question you've got to ask yourself. And I think that's really where I've got to the situation where I am now, where less is more. Unless I've got a reason for a chart to be on the screen, it doesn't need to be on there. Not just in case, not just I might want to look at it, is don't need for that. Because fortunately now, guys, with software, we can flick between different views, so we can quite easily bring up gold, quite easily bring up crude oil, quite easily bring up whatever we want to look at. Bitcoin, cryptos, however. But the point is to ask yourself the question, when I'm about to place a trade, what do I need to make a decision there and then about the market? And what do I need really quite instantly? So not that you can, for example, do you need a daily chart on your screen all the time? No, you probably don't. You're going to have a look at your daily before the trading day, or if you're swing trading, you're going to check out the daily. You're not going to look at it again. Same if you're day trading, then do you need the 4 hourly? Probably not. If you're swing trading, do you need the 1 minute? Probably not. So you start to say, well, I don't need the daily on there. I don't need to look at the 4 hourly. I can do that research once. And then all I need is a certain number of things to pull the trigger. So for example, for me, I'll have a 15-minute Dow. I'll also have a cash Dow. I'll have a spiders or a diamonds ETF, so I can see the cash session or the regular trading hours session. I might also have gold up, I might have crude oil up, only because at the moment they happen to be in play. Now, I've got enough information up there to make my decision, and really the whole thing, guys, is that you want to, most of us want to be trading less. We want to be trading decisions not as quickly. We want to be a bit more cautious about our decisions. So the less is more approach. And listen, there's guys out there who are trading from a laptop on a separate screen who are doing a massive amount of volume and are making a substantial amount of money. And then there are guys out there with banks of screens everywhere who are making nothing. There's no correlation, guys, between screen number and profitability, unfortunately. Otherwise, we'll just all be sitting with banks and banks of screens, right? So, back to the initial question of how many charts is too many. The question you've got to ask yourself is, so there's no correlation with number of screens and profitability. So back to the initial question of how many charts is too many. So the easiest way to do this is to just work out your trading decision process. So if you check the daily, how many times do you check the daily? Probably not every time in the day, so you don't need that. How many times do you check the 15-minute? Well, for me, I like to come back, I like to look and see the 15-minute, maybe go to my office, look at the 15-minute on there, I like to bring up the screens, different layouts, etc. So a 15-minute is useful for me, and also it stops me getting sucked into trades just because I've got 1 minute up there all the time. In fact, I've started to come away from having a 1 minute up all the time. Yes, I use it for entry. Yes, I use it as time entry. Yes, you can see a lot of price action clues on that. But if you're looking at it all the time, it's going to draw your eye in. It's going to make you want to pull the trigger, when in reality, you've always got to be looking further back. Where's the position? Where's the position of price? Something I've drilled into getting. Where's the position of price? Where's the position of price? What's happened before? We talked about all the things that we want to see. So that is the main thing that stops you taking the bad trade. So I want to have that really in my primary chart. Then I might want to go down to a 5. Then I might want to have some other markets to look at in view mode. Now, when I'm executing, they might change. So the view might be just, okay, an overall view of what's going on. I have a few bits and pieces on, but when I want to execute, then maybe I shift my gold and my crude oil out from 1 minute chart of what I'm trading, maybe 1 minute chart of a correlated market that I know has influence. For example, S&P 500, I'm trading Dow. I know S&P 500 has a big bearing on the Dow because the Dow's only 30 stocks, of course. Perhaps the S&P 500 is faking out. The Dow hasn't quite got there. I might just want to wait a little bit for my entry. All this kind of little stuff. So I'll have my execution, but then there's a monitoring kind of setup, etc. So the theory is, guys, that you know, however you set it up, I would always err on the side of less is more. If you can get away with 1 or 2 charts up there, then do it. I mean, it's perfectly possible to have 1 screen up there, split it up into 4, or split it up into half. Half's a bit odd sometimes on a screen, looks a bit odd and a bit stretched out. But if you split up into 4, decent sized screen, or if you're going for rotating them around like vertically and having 3 and then just 1 screen for that, I think that's more than enough. I think you can get as much information as you need on there without overloading it. Most of us, like I say, guys, most of us want to trade less. You know, we need a reason not to trade, because most of us are over trading. Most of us are trading too many setups. And in reality, if we dialed it back, we'd probably see more of an improvement. So anyway, guys, let me know your thoughts in the comment section below. How many charts is too many? How many charts do you have on your screen? And what sort of setups do you have? What do you like to look at? What time frames do you like to look at? And all that kind of stuff. All right, guys, see you next one. Take care. Bye-bye.